Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, January 11th. It is 6:56 as I'm starting the video. And as always, please run the tape at 1.5x. I think you'll be really happy with that speed. Let's take a quick look at markets. Equities continuing their bounce up about 4 to 5 tenths across the board. Oil up 1.5%. Copper up 7 tenths. I didn't get a exact read on Bitcoin, but it was up a little bit. On the macro front today, really the only big thing I've got is Jerome Powell on Capitol Hill starting his confirmation hearings. I don't have the exact time on that. If you want to get that, I think it would be a good idea. It's probably 10 o'clock. I don't think anything in Congress usually starts before then, but it may be in the afternoon. I'm not sure. We also have got Fed Governor Esther George speaking, and I think she comes on before Powell, not on Capitol Hill, but just making market comments. I think she's at between 8:30 and 9:30. So I think this week, given we've got Fed speakers almost every day, probably a good idea to just kind of keep a read on what they're saying in case there's any kind of deviation from the messaging of the last couple of weeks. And on the earnings front, not a lot happening yet. We've got KB Home after the bell. We've seen a little weakness in housing because of the interest rate pop. And then really in earnest, earnings will fire up on Friday with JP Morgan, Citi, Wells Fargo, and then next week rolling on with the banks and firing up a lot of names as we ramp up the earnings cycle. Got to tell you, I'm a little bleary-eyed this morning after watching that college football game last night. Great game, but way past my bedtime. I am heavy into the coffee this morning. So let's see if we can pull this together and find out what happened yesterday afternoon after my mid-session note. Starting here with our oscillator for the NYSE, you can see we've come down from this high or 50 range, which is at the top end, not really overbought, but as you can see, 50 has been a cap here in the last year or so. We're down in the middle of the range, so really not predictive. Not going to show you the NASDAQ oscillator. Same thing, right in the middle of the range. Not really predictive. Jumping on to SPY. Yesterday we said we had a sell signal. I said at noon I didn't think that the bulls would have enough power to rally back up over our trend line and 50 EMA. Well, as soon as you say that, that's what happens. So our sell signal that we had down below has been negated, right? Because the bulls put in a stick save, came up, recaptured the trend line, that's bullish, recaptured this 462.5, that's bullish, and recaptured the 50. So essentially came up here and closed the opening gap. So our what we thought was going to be a confirmed sell signal turned out to be a head fake. And here it is right here. We took a look below the 50 and then put in a hammer candle and rally into the close. So today, having this gap filled, that's a technical event. They could have, whenever you have a gap above, they could try and fill that right out of the gap, right out of the gate, and then take it down, or take it down and then come up at a later time to fill that gap, and that's what they did. So now today, we're up a little bit, so we're going to be, in this range here, Not sure how high. I mean, we're 3 hours before the open, 2.5 actually. So we'll see if there's a gap below on the open. And then, as usual, we keep our little game plan flexible. If they come back to 466 and fill the opening gap, then that would be your objective buy, because we're back above this large volume over price bar. We're back above the 50. So you can be long against 466, and then your first target would be 470. Now let's look ahead and say, what if the rally keeps going? What would the game plan be? Well, if you got long at 466 or any point below, then your first target's 470. That was the top of the $20 trading range. And if we were to break out above 470, that would definitely be a place to be long. Why? Well, we recaptured a level from below. That's bullish. It's an important level, 470, the top of the range. That makes the level even more important. That's bullish. And we're moving into a volume over price void where there hasn't been a lot of trading. And just as we saw here, where price moved very quickly through that range, I think if you were to get a breakout above 470, it has the potential to move this quickly. But even if it takes a couple bars, that's going to be relatively fast for a $5 move up to 475, and that would be your T2 for today. Here's just a blow up on the 30-minute chart. You can see some intermediate levels here. Here's 470. Here's 475. Here's the gap that's been all but filled with 466. One thing we need to discuss is potential downside. So with price right here and set to open above, what would be a bearish move? Well, if we opened above, then came back to 466 and that didn't hold, then you're losing a level from above, which is bearish. And then your next area of support is going to be this 50 EMA, and that's a level that I carried through from the daily chart. That is a very important level. So what I would do, and it all depends on your time frame, your trading style, and all that. If we came back in from 466, you should have a thought in your mind. Am I going to get short here, or am I going to wait? Because you know you got the 50 down here at 463.5. I think it would be perfectly acceptable and reasonable to say, you know what, I'm going to wait till price is below the 50, and then I'm going to shoot short against the 50 if we lose it, and then look for a move back down to retest the lows of yesterday. That could be a good strategy. Or you could say, you know what, if I plan to get short here, why not get short here at 466 and just be ready to cover at 463.5 if it looks like it's going to hold. So either of those are good strategies. One thing I said in the notes this morning in my little inspiration section, write down your plan. A poorly written note is better than a good memory. And in the heat of battle, it's so nice to look down at a note piece of paper that lays out your game plan with the levels. And then during the day, it's all about execution rather than thinking about, oh my God, what was I going to do here? And I should have done that there. That's what I had planned and all this kind of stuff. Write it down, follow the script, and then as the day unfolds, you can make modifications to your plan based on price action as long as you revise your notes. Because once you go into freelance mode, all bets are off because, in the fog of war, crap happens. And when things start moving quickly, you're going to forget that plan that was so crystal clear at 9 o'clock in the morning. It'll get foggy, and that's when mistakes happen. So take the trouble to write it down. Qs. Pretty good look below. Came back up, but has not taken out 380. I think that's your line. If you break above 380 and hold it today, you can be long. Just keep in mind, from a moving average point of view, things are still pretty bearish. Why? You've got all the fast moving averages moving down. You've got the 8 below the 20. You've got the 8 below the 50. And it looks like the 20 will end up being below the 50 here shortly. So you got price below all these moving averages. That's bearish in and of itself. At the very least, you've got to be very cautious on the long side until the 50 can be reclaimed up here at 390. So be aware of that. But as far as tactical trading goes, I think you can be long against 380 as long as that holds. But if this rolls over, then I would assume another test of the lows here at 372. And don't forget, we've got the CPI tomorrow and the PPI on Thursday, and I think those are going to be important factors in how the Qs trade. Just looking down at the 30-minute chart, we had the drop yesterday and the bounce taking out this downtrend line. Taking a look at how you could have handled it yesterday afternoon, you had quite a number of candles bottoming out here at 370 and a half. And remember, our trading cues, when you see, doesn't matter what time frame, it could be 5 minute, could be 30 minute, could be 2 hour or 1 hour. When you see multiple candles not being able to take out a low, then you've got an objective level to shoot at on the long side. So you had a nice opportunity to get in around, let's just call it 370, and you got a $10 move into the close. And so just dissecting yesterday's opportunities, that would have been a good one, and you certainly had an objective chance to do that. Another opportunity would have been taking out this candle here at 373. You made a new high, and then another opportunity would be moving into the gap here at 375. So whether you were entering at 370, at 373, or 375, you still had a very nice closing trade. And I think the key to all that is mental flexibility. We've been in a downtrend, but downtrends don't last forever. And then you got to look for clues on where a bounce might come, and then look at the price action that's going with it. IWM, like most of the other indexes and stocks, took a deep look down and put in a nice bounce, But notice here the posture is even worse. Why? Because price is below everything, below the 200, and of course below all the fast moving averages. Here the 8 and the 20 are already below the 50, and another day or so the 8 and the 20 will be below the 200, and then you're starting to get that bearish stack on the moving averages. So that's a clue of what the posture is on any given instrument that you're trading. Here we can see that price is trying to close that opening gap from yesterday. I think really right here at 217 is going to be an important pivot point today. You've got some overhead resistance here. You've got a large volume over price bar here. I wouldn't be surprised, just taking a look at the posture of this thing. I think 217 is going to be an important spot. If you can break above, then I think you got to run to 220. So that's a $3 upside to your first resistance. But if it gets stopped here, I think it would be objective to try a short. And I would be looking at the rest of the indexes. If you get a sense that everything's kind of stalling out, and you see IWM stalling right along with it at this level, then you can try a shot on the downside with a stop just above. And then here you've got the 30-minute chart showing these levels right here. Before we get into Fatman, if you're new here, thank you so much for spending some time this morning with me. I think if you learn to trust my levels and then focus all your attention on execution and learning trading techniques around those levels, I think your trading will improve greatly. And if you have an appreciation for that kind of analysis, please hit the subscribe button and the alarm bell, post notifications, so you get all the YouTube content that I post. But then also go over in the show notes. I've got a link there to the blog site where you can drop in your email, get all my content delivered right to your inbox. You won't have to go searching on social media or wondering if I've published anything. Just drop your email in, and then you'll get everything, morning, noon, or night, right in your box. And also you get an invite to our trading room where you can join our community and get a lot of ideas and camaraderie within the group of like-minded individuals that are all working hard to get better. So let's look at Fatman, starting with Facebook. We bottomed out at 316, put in a nice bounce. Where's the overhead resistance? I think it's going to be right in here at 334, where you've got the confluence of a downtrend line and this large volume over price bar and all this these reaction levels right here. So I think there's still some upside up to 334, depending on what's going on in the market. On the downside, if you got a break back below 324, I think it would be an objective place to short, because this was a prior low. You had a prior low here as well, drop back below that level, then all this becomes resistance. I was actually quite surprised it didn't really even hesitate at 324. I thought that was going to be a level where it rallied and died, but really showed no indication of that and just popped up. I wouldn't be surprised if this morning we go up and fill that gap, get that check mark off the board as a technical analysis must do, fill the gap, and then run into trouble up at this downtrend line and overhead resistance. Apple, nice study and technical analysis, dropped right down to the top of the gap, put in multiple candles. That was a good place to try a long, You got a nice move back up to resistance at 172.5. And now we've got a little layer here where you can see all this trading. So I think we've got a layer of resistance here at 172.5 that goes up to 173.5. And if price were to be able to pop above 173.5, I think you got a first resistance at 176, where you see the next high volume over price bar. Tesla took a little look below 1,000, recaptured it. If you were into actively trading that, that was a big level. That was the bottom of our $200 range box that spans from 1,000 up to 1,200. Reclaim that box, get long. Now you've got a run up to 1060 at the bottom of the old gap. And then you've got a more significant level at 1080 to overcome. Now, if price were to, if you're not in and you get a break above 1080, then I think you can be long and look for up towards 1140 at the top of the old gap, and then up towards 1150 at the top of this range and the next large volume over price bar. On the downside, bears do not want to see, our bulls don't want to see price go back down and lose 1,000. Then that opens up that measured move target down towards 800. Microsoft. We had sent out a note yesterday afternoon, or maybe it was early morning, late morning, to cover any shorts that you had into 305 and expect a bounce. That's what we got. 305 was the big breakout level, so I thought that was going to hold out of the gate. And so now we got the bounce. We got the fill of this gap. I've dropped in the Fibonacci retracements from high to low, and we see that the 38% level corresponds to this 321 level, which was this big trading range. This morning, you can use the top of the gap as your pivot point. But if you get a run back into 321, I would be covering that and either reversing right away or waiting for confirmation. This posture is still very bearish. We've got the 8 below the 50. We've got all the fast moving averages turning down, and we've still got price well below this trading range from 345 down to 321. And until price can take out 321 and get back into the old range, I think you got to be leaning lower, aside from any bounce trades that you may want to employ. Amazon broke down from this $125 box right here. We came down to $32.50, took another leg down yesterday, put in a rally, and we're making a move back up to try and close that opening gap. I think $32.50 is your pivot point today. If you can break above, then I think you've got a fairly open path to $33.15 right in that area. You may get a little hesitation here at $32.80, but I think the main door is going to be open back up to $33.15. But I think the key this morning will be this $32.50 right out of the gate, which I think should be your pivot point. Yesterday in the mid-session video, we talked about Google taking a look below, but then having the bulls buy it up and save it. So effectively what we've done is test this line here at 2,700 and all these prior lows. So from a technical standpoint, we've successfully tested the prior lows, and the bulls have responded and broken it back above a sizable volume over price profile resistance right here at 27.50. So I think that is your, even though I've got the main one down here, I think the pivot this morning is at 27.50, looking for 2800. Above 2800, it may be slow going, but I think the door would be open to 29.25. But like all the other ones, to really get truly bullish, recapture the breakdown candle high and recapture the 50 EMA. So while this was an impressive save, a technical test of the lows that held, just remember, you've got a big breakdown candle here. You've got the 8 and the 20 below the 50, which is bearish. And you got price below all of them, which is bearish as well. And really all you've got is the 200 down here at 26.25 that price is above. So I think the posture is relatively bearish, intermediate term. Now, short term, as we just discussed, you can be bullish against 27.50 and then see how far this bounce can go. Netflix, still very bearish. Why? Price below everything. Price below, when I mean everything, all the moving averages. Notice how all the moving averages are stacking bearish. You've got the 50 sloped down. You've got the 20 below the 50. You've got the 8 below the 20. They're all progressively steeper. And you've got price below everything, including the 200. So very bearish posture. You've also got price inside the prior trading range at 90. I would be looking to fade any kind of bounce that you got back up into 560 or even the 200 here at 575. Very bearish setup. And but right here, tough to do anything in no man's land. You got to wait for a bounce to fade, in my opinion. And let's wrap up with semiconductors. Similar setup as maybe Microsoft and some of the other ones that we showed. We tested the prior lows, right, back here, 288. We had 4 candles, 4 hours of trading right at 288, where the bears lost power. Objective place to try a long, and you got a $10 run into 298. Now keep in mind, and I've got it marked, this 298 level is the backside of the daily 50 EMA, and therefore that makes 298 a very, very important spot on the chart. If you break above, break out of this downtrend channel, recapture the 50 from below, that's going to be bullish, and I think you can be long against 298, long against the 50, and that's going to be a really important toggle point for you on the SMH semiconductor index. So let's wrap it up there. Nice bounce. Keep in mind the big trend. Although we don't have an official sell signal on SPY, IWM is very weak. The posture on the Qs is still bearish. Short term, I think bullish positioning is counter trend trade, just for the reasons that we've spoken about, that in a lot of cases the price is below the moving averages and remains below the 50. And all that changes on a recapture of the 50 or recapturing an important level on the chart that you can confidently shoot against on the long side. So let's see how far this bounce can extend. Keep in mind that Powell is talking, and anything can happen, especially if he gets questions on inflation and starts deviating from the plan. That's not the base case, but you never ever know. So hope you guys have a really good day of trading. I will post things midday, especially if I see them. So look forward to that. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.